Good morning, and welcome to episode 139 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 6th, 2023. Today I join you live from Lake Tahoe, where I'm attending the Oxford Club's private wealth seminar here at the Edgewood Resort. Last week, if you recall, we didn't go over current events. Instead, we went over some key factors that, if they converge or start to converge, might suggest that a downturn in gold prices would be the start of a bear market, as opposed to a dip that's worthy of buying in a bull market. So 2 weeks ago, when we did look at current events, the Fed Chairman Jerome Powell and other key economic leaders were heading to Jackson Hole, Wyoming for their summit. And the BRICS nations, Brazil, Russia, India, China, and South Africa, were heading to Johannesburg to discuss the future of our world's bipolar dollar versus other currencies. And the results were kind of interesting. You know, at the BRICS Nation Summit, some new nations were added to include Saudi Arabia, United Arab Emirates, and Iran. And they discussed the potential of a new consolidated currency that would rival the US dollar, whereas these central banks are looking that direction and believe that it's necessary because they don't think the dollar's treating them well enough, I guess. It's probably still a long way off, and not everybody in that group is on board with moving forward with a rival currency. The central banks, though, of the world, and particularly of those BRICS nations, continue to buy gold, however, as they move that potential direction, and that is really the support we're seeing in the gold markets. At Jackson Hole, Federal Reserve Chairman Jerome Powell went ahead and made hawkish comments, if you will. They basically said they're going to continue to raise interest rates as long as necessary, and they're not concerned about doing so, that they're not breaking anything in the economies. However, that didn't come across as hawkish to listeners, and the comments were more dovishly received by the markets. So the Fed Watch tool from the CME suggests that at the next Federal Open Market Committee meeting that everyone expects, well, 93% of folks expect rates to remain unchanged as the Fed takes a wait-and-see attitude on the data. We'll take a look at the numbers, and I'll talk a little bit about what is supporting the dollar and putting headwinds in the sales of gold here for a second. But first, today's prices versus 2 weeks ago. Gold is your only winner in that 2-week period. It's up 1.2% to $1,926.10 an ounce from $1,904.20 2 weeks ago. Silver's down 1.4% to $23.52 versus $23.85. Platinum is down 1.1%, $10 to $9.26 an ounce versus $9.36 an ounce. And palladium is down 5.9% to $1,238 an ounce, where it was $1,316 2 weeks ago. With gold outperforming silver, it now takes more ounces of silver to buy an ounce of gold. So the gold-silver ratio is up to 82.2 versus 80.13 2 weeks ago. And I mentioned the surging dollar. It's not strong by any means, but it's stronger against other major currencies. It's up to 104.66 on the index versus 103.92 2 weeks ago. Now that's still a far cry from the 116 levels we saw this time a year ago, but the dollar is the strongest currency out there, and there's really two reasons for that. One, we're seeing bond yields continue to rise, albeit slowly at these levels. They're continuing to rise, and that is putting pressure on gold, which is trading against the dollar right now. The second thing we're seeing is we're seeing increased concerns that China and the Eurozone are slipping into recession as the data comes out in those sectors. So again, it's not so much that the dollar's strong, it's stronger than other weaker partners or trading partners. So we'll keep an eye on yields as we go forward. It has a big impact on what's going on with gold, but I do think you have that extended buying opportunity here at your fingertips. As always, we'd like you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions, follow us on social media at Asset Strategies International, take our newsletters. We've got a September issue coming out of Information Line this Thursday, tomorrow, and our twice weekly alerts, always something interesting. And as the year winds down, there's only 2 more opportunities to see me out there on the road. We'll be talking more about both of them and giving you the opportunity to sign up for both the New Orleans Investment Conference at the beginning of November. I hope you'll join me there. And then also there are limited spots for the President's Week gathering that occurs every year with Joel Nagel and Mike Cobb. This will be down in Miami Beach this November, the middle of November, right before Thanksgiving. So look for more details and the ability to sign up for those. But in the end, don't ever forget that getting rich starts with keeping what's yours.